this has been done, and time again, we see this trajectory of you have a powerful nation that becomes powerful because they invest in their economy, they invest in education, they invest in technology, and then they start to get a little arrogant, and bureaucracy sets in, greed sets in, normal human emotion and behavior sets in. A lot of people might even say that we're seeing this play out in America today.
Hey guys, welcome back to Make More. I'm Matt Hessen, I'm your host. I've got a very, very special treat for you today. I've got with me a great friend, a master of crypto. And that's what we're going to teach you today. We're going to go into crypto, and we're going to get deep into it, and we're going to show you how to make money at it, and we're going to have fun doing it. Well, let me introduce you to my guest, my great friend, Joey Santoro. How you doing, Joey?
I'm doing great, Matt. I'm happy to be here.
It's great to see you, my friend. It's been too long.
Yeah, it really has.
You're living down in Florida now?
Yep, I'm in Miami, sunny Miami.
Whereabouts?
I'm in Brickell, in the mainland.
Brickell.
Yeah.
You're in downtown?
Yeah, right
It's
there.
a great spot.
Yeah.
Yeah, I lived there from 95 to 2003. It was great.
Yeah.
So I want to dive right in because we got a lot of content to cover.
Totally.
And I want to introduce you to the audience, let you know who you're listening to. Joey Santoro is not only a personal friend of the family. I know his parents real well. I've known Joey for a lot of years. Joey went to J. Sarah Catholic High School where I met him. That's where you and I met. And Joey was, I think you were going to study medicine at that point, weren't you?
I was pre-med.
You're pre-med, and you're in the medical magnet program.
Yeah, it's a great program.
So Joey was a superstar in the medical magnet program, following in his dad's footsteps, who's a world-renowned physician. And he was going to go to Duke University, and he did go to Duke University. And I think you were studying medicine there, right? I
started medicine, and I switched.
Yeah. So tell us a little bit about that. How do you go from medicine to crypto? I mean, because you ended up with a computer science degree, right?
Yep. So it really was just like that. It was medicine, then computer science, then crypto. So I didn't go straight to crypto.
Okay.
Yeah. And how I ended up in crypto was pretty simple. I was also very into personal finance. You know, my dad taught me everything I know about investing. And he kind of got me down the rabbit hole and introduced me to you. We did some investing together.
Yeah, we did.
Yeah, we did.
Made some good money.
We totally did. So I just combined my two loves of finance and technology, and then I found crypto, and it was a total fit.
Well, you've come a long way in the crypto world. I mean, you started your own company. You've got a bestseller book here, DeFi and the Future of Finance. I read it. Yeah. It's a great read. If you're into learning about decentralized finance, and you will be after this podcast, and you want to learn about crypto, Joey is an expert in both. And he is the master. And he started his own company. You want to talk a little bit about that?
Yeah, sure. So I would like to put a pin in the company and talk like more high level about crypto.
Sure.
Because the company is like pretty in the weeds.
Right.
So I think it would be natural to maybe start talking about crypto at a high level, then get into what we did.
Okay.
Because what we did was pretty specific. So I think it'd be easier for the audience to understand it.
That'd be great.
After kind of getting more into it.
All right. Let's do it.
Sweet.
Okay, so let's talk about crypto for a second. Knowing that you are an expert at crypto, and I'm certainly not an expert at crypto. I take my lead from you. I follow you. I mean, I've made money with you, a pretty good amount of money in crypto with you. Let's start with crypto in general. What is crypto, and how do these cryptocurrencies, evolve? How do they come into being?
Yeah, totally. So even kind of a meta point there, like, I know crypto, and you're obviously a total expert in real estate. And so that's just the beauty of the market, right? Everyone has different specialties, and everyone kind of like learns from each other and makes money together. And that really is one of the core promises of crypto, is to sort of unlock markets and allow for better markets, more efficient communication and sort of value creation across all these different skill sets.
Right.
That's maybe more abstract of a concept. So I'll start at the top. Crypto first came about in 2009 with the release of Bitcoin.
Right.
So if you've heard of crypto, you've probably heard of Bitcoin. Maybe even you heard of Bitcoin, the word Bitcoin, before you even heard the word crypto. And Bitcoin is the first cryptocurrency. It's the largest cryptocurrency. And it's sort of what people think about when they think about crypto or the blockchain. blockchain is a technology, kind of like the internet, you know? So you say the internet, you mean something specific. You're talking about computers and servers and, you know, the apps on your phone and whatever. And they all talk to each other through the internet. So you can think of the blockchain, even though there's not one blockchain, there's many. But blockchain is a computer for value. It's like an economy. So when you talk about the internet, it's like a computer for data. You're sending data all over the world. Blockchains let you send value and actual assets all around the world, which is a super novel concept.
It is really, it's hard to grasp that concept.
Yeah.
You know, and put it in your head and figure out how you did it and how it works for the investor.
Yeah.
So let's share with the investor a little bit about Bitcoin. Let's use Bitcoin as an example.
Perfect. So starting with Bitcoin and then kind of moving up, because Bitcoin actually is beautiful because it's the simplest cryptocurrency. And some might call that a feature and some might call that a bug. I think it's both, you know, because simplicity is key for people to understand what it is that they're holding and using and trading. But then maybe it's not as functional as something else. So Bitcoin, very simply, is a currency on top of a blockchain. That's it. It's that simple. So the blockchain, the way you can think about a blockchain is it's a way to keep track of data that can't be edited.
Okay.
So it's a ledger.
Would that lend itself then to less fraud in that financial system?
On the Bitcoin blockchain, there's essentially no fraud. There can't be because it's all governed by rules. The blockchain is code, and the code determines how you can move your money. So the only way to lose your money is if someone steals your key. It's kind of like if someone steals the key to your house, right, then they can get in your house. Now, what's powerful about that is that it doesn't require any intermediaries at all. So if you talk about like the US dollar is sort of backed by the faith and credit of the United States government. And that requires a functioning government for people to believe in the dollar. And as we've seen in countries that don't have a functioning government, where crypto is actually a lot more powerful, it's the other currencies inflate to zero.
Well, so let's talk about that for a second. So when the United States went off the gold standard, and for our listeners, up until like 1974, I think, we were on the gold standard, which literally meant that there was an ounce of gold behind every dollar. And so President Nixon took us off the gold standard, basically decoupled dollars from gold, and there was nothing backing the U.S. dollar except the full faith and credit of the United States government. So basically the fiat currency, which is a government-dictated currency, right?
Yeah.
And so what I find so amazing about Bitcoin and the blockchain is that there's really zero fraud unless somebody steals your key.
Exactly.
And
there's zero debasement, not even fraud.
Right.
That's the power. That's the even more powerful concept. So when you talk about exactly what happened when the U.S. dollar came off the gold standard, now dollars, there's this concept of hard money, something that's real, something that there's this fixed supply of. And well, real is kind of a complicated term, but it has a fixed supply and no one party kind of has a monopoly over that money. It's hard in that sense. So the dollar was hard before we went off the gold standard. But what happens time and again, we were not the first nation or, to actually debase their currency by going from hard to soft. This has happened in every empire ever since like the Romans, the Greeks,
right?
They all did this. They had gold. And then the government was like, oh, let me like pour in some cheap nickel into the gold to dilute the value of the coins. Right. And this has been done and time again. We see this trajectory of you have a powerful nation that becomes powerful because they invest in their economy. They invest in education. They invest in technology. And then they start to get a little arrogant and bureaucracy sets in, greed sets in, normal human emotion and behavior sets in. A lot of people might even say that we're seeing this play out in America today, where inflation's on the rise, populism's on the rise, and people are kind of a little bit shaky in the future faith of the dollar. I personally think America is one of the greatest countries in the world, and I'm proud to be American. But I also think America is losing its competitiveness, and I want to be, self-aware about that. And it'd be interesting even to talk about that. I don't want to get too far away from Bitcoin because that's the focus of the conversation, but the conversations are related because the whole reason to own Bitcoin, why we're talking about nations and currencies and all this, is that Bitcoin is a technological alternative. Instead of believing in some other nation like China or whoever, London, Spain, the EU, whatever, instead of believing in another country to come and take the throne, you believe in technology. And blockchain offers a new way forward for humanity to kind of grow and scale. And that's what makes me really excited.
Well, that and the safety of the coin.
Exactly.
I think there's a real misconception out there that it's riskier than a dollar, right? I mean, there's this misconception that so you've been involved in technical standards that have basically protected $3 billion in assets, right?
Yeah, I personally have, and I'm not even, I'm just one person contributing to this movement. Like there's thousands of people who are like smarter than I am, who are all like kind of throwing their lot in with crypto and trying to make it better. And how can you bet against that?
So can you explain a little bit about your venture? I know you got a new venture you're in, and part of your protection of the currencies and the protocols. Can you talk a little bit about that?
Totally. So let's go one layer deeper. So we go from Bitcoin to talk about Ethereum. Okay. So Bitcoin is a currency, and it has these properties of hardness. There's a fixed total supply. You can send it anywhere in the world, and there's no nation or central party behind it. That's great. That's all it does, and it's great that that's what it does. People understand it, etc. The second cryptocurrency to ever exist, and the second, or maybe not the second to ever exist, but certainly the second largest one today by market cap and for the last 10 years is Ethereum. So if you haven't heard of Ethereum, Ethereum is the second largest cryptocurrency, and Ethereum represents a computer, a shared computer that you can actually build apps on top of. So I built my company on top of Ethereum. So if Bitcoin is kind of like gold, Ethereum is kind of like oil. It's an economy. It's like oil mixed with an app store. And I made an app on top of Ethereum.
Wow.
Yeah.
So Ethereum, would you say Ethereum is not in dollars and cents more valuable, but from a technological standpoint, more valuable than, say, Bitcoin?
So I'll talk my book a little bit here. My entire portfolio is, I would say, maybe 70% crypto, and of that 70%, it's maybe 80% Ethereum.
Okay, there you go, folks. There's your first clue right there. He just gave you a money-making idea right there. Go buy Ethereum is what you're saying.
I'm just telling you what I do.
Well, I know you made a lot of money, so I know. Hey, don't bullshit me.
I built my company on Ethereum. I have a tremendous amount of faith in Ethereum. I believe it's going to be the most valuable asset ever in the history of humanity. I believe Ethereum is going to flip Bitcoin, and it's going to flip gold.
So when you say it's going to flip them, what does that mean?
I mean that the market capitalization of Ethereum will go from what it today is like 400 billion to tens of trillions of dollars.
And you can get Bitcoin for what, 3,000?
Ethereum right now, the price is 3,700 today. It recently neared its all-time high of 4,200, roughly. And
so you'd if you were me, you'd buy more of that, more Ethereum.
So it depends, right? If you had your entire net worth in Ethereum, I would say don't buy more.
Yeah, right.
So it's all a question of what's your exposure, what's your risk tolerance, what's your time horizon. If you have a very long time horizon and a very strong stomach, I would strongly consider having a reasonable sized bet on Ethereum, like a couple percentage points of your portfolio.
We talked in our last podcast about risk, return, and your ability to accept risk.
Totally.
The higher up the risk curve, the more you should expect in return, right?
Exactly.
Sometimes it doesn't work out, but that's just the nature of the business. I have a question for you about up and coming cryptos. Can you tell us which ones you got your eyes on?
Yeah. So let's just keep going deeper, right? So we got biggest Bitcoin, second biggest Ethereum. I built my company on top of Ethereum. Usually when you're creating a project or an app on Ethereum, it's code, and it often involves one or several tokens. Okay. So tokens are the key big idea of crypto, of blockchains, and tokens are going to take over the world. What is a token? A token is a unit of something valuable represented in data. So, for example, you have real valuable things in the real world: your car, your house, your, designer clothes or jewelry or whatever. These are like real things. And you can imagine if you had a digital representation of that, or something that's completely digital, like a piece of artwork or whatever. You need these NFTs. I don't know. We can talk about NFTs. Yeah. So that's a very interesting conversation as well. But these are all tokens. They're tokens that can have a liquid value, and they can be transacted anywhere in the world digitally. And blockchains are especially good at digitally native economies. Things like video games and NFTs type art, even things like domain names, like your URL for your website, or intellectual property, things that are kind of digital or non-tangible in nature. Blockchains are incredible at managing, but they can also be incredible if you think of the legal framework around, like, you sign a contract, I'm going to go into escrow, I'm going to sell you my house. These can be digitized. You can digitize the contract and then enforce it physically, backed by, the legal system, like the real world legal system, but you can put the contracts on a blockchain. So now you get more liquidity, you get more optionality, you unlock the market because it's a global market. And that's what's so beautiful about blockchains. So when you talk about up and coming tokens, I mean, there's millions of them. In my personal portfolio, besides Bitcoin and Ethereum, I've only really done angel investments because I've found that buying other tokens is kind of a crapshoot. And I like to reason by analogy. I like to take people back into the past and see how we can learn from the past to apply it to this new technology. So when you look at cryptocurrency, it's a technological wave similar to the internet. So the internet, if you were going to try to pick internet stocks in the 90s, you were probably going to lose your shirt.
Right. We talked about that.
Yeah. And that, crypto's gone through several market cycles, at least 4, where the price has gone up 10 times and then down 90%, 99% even. And if you invest in the wrong thing, you lose 100% of your money and you're out of the game. Right? It's the same with
diversification. So
diversification is key, or being concentrated on the most lindy, the most likely to be around in the future. Like, if I put my entire net worth in Apple stock, yeah, that's risky, but I'll probably be okay. I might even make a ton of money,
Right. Yeah, you've seen those guys that started with, the very beginning and they put $1,000 in. Now they're multimillionaires.
Yeah, exactly. So my personal investment philosophy is keep it simple and invest big in quality. So my entire portfolio is, other than the investments I've done with you, cash, the S&P 500, Bitcoin, and Ethereum. That's it. That's not even picking individual stocks. I actually do have some Coinbase stock, but other than that,
so I want to explain. Yeah. I make sure our viewers understand. The tokens are traded on an exchange. Right?
Yeah,
and there's multiple exchanges out there. And so if you're in the stock market, you got the New York Stock Exchange where stocks are traded. You've got the NASDAQ. You've got the S&P 500. I mean, you've got different exchanges that they're traded on.
Yeah.
The same is true for the tokens and the coins, right?
Yeah. So what's really cool about tokens is that a token exists independent of any exchange. So if you have a stock, you have to pick which stock exchange you're talking about. Are you trading on the New York Stock Exchange? Are you trading on the Nikkei Stock Exchange in Japan? Are you trading on the Chinese Stock Exchange? And so if you look at crypto, a token is a token. It lives on a specific blockchain. So my Ethereum lives on Ethereum, or if I have a stable coin, USDC, to tease what my company did, we also had a stable coin that lives on Ethereum. Bitcoin lives on the Bitcoin blockchain. But exchanges are kind of software that comes up. So the biggest exchange in the US is Coinbase.
Right.
On Coinbase, you can trade, hundreds of cryptocurrencies. There's also Binance, Kraken, Gemini. These are all exchanges. But you can also trade your coins directly from your own wallet. This is one of the coolest, powerful things about crypto. So when I use Coinbase, I have to send my Bitcoin to Coinbase and then cross my fingers and hope that they send it back to me after I make any trades or withdrawals or whatever. But in crypto, now that we have code that can govern our tokens, you can have what's called a decentralized exchange, or an exchange where you maintain custody of your assets. So let's say you and I want to make a deal where I have some NFT and you have a car that I like, and we think that they're approximately the same market value. So we can make a contract that says, I'm going to send you mine when you send me yours. And it happens at the same time.
Totally protected.
So, totally protected. You can never run away with my NFT unless you also give me your car. And that is called a decentralized exchange because it happens using the blockchain without anybody in the middle. And we can do that, pay $10, do it today, nobody in the middle, that's it. And it happens.
So, you're in the business of crypto and deep finance, and you understand that whole universe. And we talk about, the fact that you're protecting $3 billion worth of assets. But I think our listeners are maybe concerned about what happened with FTX and Sam Bankman-Fried and the potential for their whole investment to go down the shitter.
Yeah.
Can you talk a little about what happened there and what investors should or shouldn't be concerned about?
So what happened with Sam Bankman-Fried and FTX is actually one of the most, it was really a tragedy, and it was one of the worst things to happen to the cryptocurrency industry. Obviously, because a lot of people lost money, and luckily the court proceedings are kind of going well, and it looks like there's going to be a lot of capital returned to people. I don't know the exact numbers, but I know that there's an estate that, they're going to chop up and start sending back to people. And so what kind of regulators might say is they might say, look, this SBF guy was the biggest scammer in history and he stole $10 billion from people. And so crypto is bad. But SBF is actually anti-crypto because what he did is he created a company with a black box that he controlled, and he had all the assets, and he just went and bought a bunch of properties in the Bahamas and threw parties and stuff and stole everybody's money.
Sounds like fun.
It sounds like fun, but he's the biggest scammer in history, and he's sort of the villain. He's anti-crypto, and he hid behind the values of crypto and the promise of crypto in order to steal money from people. And this is something that is going to be a conversation as the technology continues to get adopted. But what we need more decentralized exchanges like what I told you. For example, Uniswap is the biggest decentralized exchange. And this would never happen on Uniswap. It's impossible because your currency stays in your wallet.
Right.
So no one's going to run away with your money if you have it in your house.
And that's what I think is really important for the investors to understand.
Exactly.
And for our audience to understand is that it literally can't happen in a definanced situation.
Exactly.
But could it happen on Coinbase?
It could. And so this is kind of the adoption problem. And so if you ask me to make a prediction about the future, it's hard to say exactly how long these kind of things will take. I personally have the majority of my cryptocurrency in a secure setup that I maintain myself. But it's very difficult to do that because crypto is a double-edged sword. I have the keys, but if I lose the keys, I lose my crypto. So people use services like Coinbase, and I have maybe a quarter of my crypto in Coinbase. People use these services because Coinbase has a trusted brand. It's regulated. I personally trust Coinbase. I would stake my reputation and say that that's the first place that you should go if you want to buy crypto in the US. But eventually, if you have a significant portion of your net worth that you wouldn't be willing to lose in crypto, you should start to learn how to kind of custody it yourself so that you have all the control and you're not...
You have the key.
You have the key. Exactly. And so, yeah, Coinbase is a great exchange, but it has this problem. What if, they cook the books? What if they pull an Enron? That's possible. And it scares people. And that's why crypto is not something to be trifled with. So you should never, ever bet money that you're not willing to lose. You should understand as much as you can the risks that you're taking when you're investing in something, a new technology like
Bitcoin and Ethereum. You're not really at risk for, are you?
Well, if you buy your Bitcoin on Coinbase,
Yeah, you are.
then you are. And for example, even if you custody your own Bitcoin, but you do it in a wallet that has insecure software, now you can get hacked. So even though the blockchain itself is iron, there's no way to hack the blockchain, but there's so many risks that you got to understand.
So
when you said earlier, actually, I want to touch on this. You said that I'm protecting billions of dollars. I'm not. I actually wrote what's called a software standard to help other people write code to kind of communicate with each other and be more secure to custody those assets. So it's the same like decentralized exchange like we talked about. I wrote a decentralized vault standard.
Okay.
A vault for holding tokens.
Let me put it this way. You're playing a major role in it.
I did. And it's probably my greatest creation ever was my contribution. There's 5 authors, but it was originally my idea to create a standard around securing crypto tokens in a decentralized finance context. And now it's being used by pretty much all of the biggest decentralized finance projects. And I personally think decentralized finance is the killer app for crypto, like the absolute killer app. And now would be, I guess, a good time to talk a little bit more about specifically what is decentralized finance and then what my company did inside of DeFi.
Yeah, because you did a stable coin, right?
Exactly.
Let's talk. What is a stable coin?
Yeah. So a stable coin is a cryptocurrency that is intended to have the same price as some other asset. It's stable relative to some other asset. So typically, the vast majority of what we would call a stable coin are US dollar stable coins. So it's kind of funny. It's a cryptocurrency that is just always a dollar. And people are like, why would I invest in that? Because I could just put dollars in my Bank of America or whatever. And so the key point here is that in order to do these trustless, decentralized exchanges, you have to be on the blockchain already. You have to be on chain. Kind of like online, you want to be on chain.
Yeah, it makes sense.
And so you need a stable coin to get on chain. And there's really 2 ways to do a stable coin. You can do it asset backed. So you have a company, Coinbase, for example, is in a consortium with Circle, and they have the second largest stable coin, and in my opinion, the most trusted stable coin called USDC for USD coin. Right. It's a coin, it's a stable coin that is backed 1-to-1 by US dollars that are invested basically in like treasury bills or whatever. And so if you want to buy one of those, you go on Coinbase, you can wire them money and they'll give you the stable coin for 0 fees.
So is a stable coin a store of value, like almost like a warehousing coin where you basically are protecting your asset?
It's a tokenized dollar. So when you talk about tokens, we want to do all these cool blockchain transactions, but you don't want to be exposed to like the price of Ethereum or the price of Bitcoin. You would use a stable coin. And then the second way to do a stable coin, so the first way is asset backed. The second way is synthetic or decentralized, if you will. And it uses some other mechanism, like, for example, having additional collateral to back the value, but it uses code for maybe like loan agreements. The largest decentralized currency is called DAI, D-A-I. And it's on MakerDAO, which is the project that backs it. And MakerDAO is like the coolest thing ever. It was really, if not the first, it was certainly the largest decentralized finance project. Of the $3 billion in the standard that I wrote, $1 billion is in MakerDAO, in this stablecoin DAI. And what it does is it unlocks leverage and treasury bill yields in a totally decentralized way for users. So let's say I have a bunch of Ethereum, and let's say I want to borrow money against it, but I don't want to go to my bank or go to Coinbase and have them like charge me fees or take custody of my assets. I can go to this app, MakerDAO. I can go on there and I can put in collateral, and it still stays in my power, but the collateral becomes part of this software smart contract. It's a contract where if the value of the Ethereum goes down, they'll go sell it on an open market and repay the loan. But I get to borrow the stable coin DAI, and then I can go sell it and buy more Ethereum or buy a house or whatever.
Sense. Makes sense.
Yeah. And I can do it like, not me personally, but anybody, like, you could go on there, you could borrow $100 million today. I could show you how to do it. We could set it up in like 20 minutes.
That's amazing.
Yeah. But you just have to put in 200 million in collateral.
Yeah.
It's that simple.
Well, I'm not going to do that. I've got weddings to pay for, and
So all I'm saying is this is an interesting way to, you could finance your purchases using decentralized finance.
So let's bring it down a notch because very technical.
Right.
And I think for the audience that's with us today, they want to know next steps. So when they leave today,
Right.
they want to be able to walk out of here and go, I listened to Joey Santoro,
Yeah.
who is undoubtedly one of the foremost experts on crypto and finance markets. He knows where to go. He's telling me to buy Bitcoin. He's telling me to buy Ethereum, or suggesting that would be a good investment. Two of the best.
Right.
Buy it on Coinbase because that's a reputable exchange. So I want the audience to take away from this discussion, that they can get involved. Yeah. That they don't have to understand. They don't have to have your level of understanding to make money at it and put it in their portfolio. And so what I always tell my listeners is, you take your tolerance for risk and how much money you have, make sure it's well diversified. And this is part of a portfolio your portfolio should contain Bitcoin and Ethereum. It should contain a portion, call it 10% of your net worth or 20% of your net, whatever your tolerance for risk is. I put a lot into when you told me about Bitcoin and Ethereum. And it went from, like, when I bought it was 24,000, it went up to 48 or 49. And I was buying up just tons of real estate.
Yeah.
I mean, I buy 20 to 30 projects a year.
Totally.
So unfortunately, I needed the cash. And I sold out, now it's at 70.
Hey, dude, that's life.
but that's making money, baby.
Yeah.
So I was very stoked on your suggestions. And you're obviously one of the foremost thinkers and leaders in this industry. So I'm very appreciative of what you've done for me. And I know our listeners are going to take a lot away from this. Maybe some of the technical stuff they'll have a little difficulty, absorbing, but they'll understand the basis of blockchain. They understand the basis of Bitcoin and how Ethereum works. I mean, you've just given them a whole 4-year degree in Bitcoin and cryptocurrencies.
Yeah, I mean, I really did cut my teeth to learn all this stuff, so I'm happy to give everybody a shortcut.
It's amazing. I wanted to ask you about where you see crypto going in the next 5 to 10 years.
Yeah,
So these guys invest today. What should they expect?
So making predictions on time horizons that are more than like a couple months from now is obviously like you're throwing a dart at a dartboard. But what I could tell you and what I believe is that cryptocurrency and on-chain, if you will, is the future of the economy. It's the digital economy going forward. All like assets are eventually going to move on-chain in the same way that pretty much all business has moved online, right? So if you look at if you're just doing brick and mortar handshake deals, like you can do that, but you're going to lose to somebody who's using the best available technology, and blockchain is the best available technology. So I don't know if it's going to be 10 years. It could be 5, it could be 30. But because technology adoption trends are very difficult to predict. Like I mentioned to you, even today, if the listeners want to go buy cryptocurrency, there's so many risks involved. I think it's worth it to get involved, even with the risks. And I can give you kind of a play-by-play, like these are the guidelines that I would follow.
Where is the best place for them to learn?
Oh, yeah. I mean, to learn, for me, crypto has this problem. There's like a lot of kind of folkloric knowledge and a lot of like tribalism. So for example, like there's this maxi kind of concept where if you follow one cryptocurrency, that's like the one true cryptocurrency, like the Bitcoin maxi community or the Ethereum maxi community. And a lot of people would even probably accuse me of being an Ethereum maxi, which I'm fine with that. I love Ethereum, but
I can tell. Very obvious.
So even like up and coming blockchains like Solana is quickly rising in the ranks, and it's got a really great community behind it. A lot of my friends are building companies on Solana, for example. There's all these other what are called layer 2 projects, which I'm probably not going to get into because it's too technical, but there are these like other blockchains that are coming up with new technologies and faster, better settlement guarantees and whatever. So all of these are kind of out there, and my advice is to kind of just like get on Twitter and like start kind of following people in the crypto industry, like Brian Armstrong, the CEO of Coinbase, and like looking at what's happening kind of right now with like these ETF decisions. Like you could follow Larry Fink, or if you're interested, like some cool people, for example, like Jake Chervinsky, who is now the legal counsel for Variant, which I'm a venture partner at Variant. So I source deals for them, and, you know, they're a well-known crypto VC. Actually, I would think that that's probably the best place to start, is like, look at the top crypto VCs, Andreessen Horowitz, Paradigm, Variant, etc. Just like go Google and find the top firms, and then follow like Chris Dixon, follow, you know, all the like general partners there, and look at their thought leadership. And I think that you'll get a really great understanding of crypto.
So that's really helpful for our listeners. I mean, just those names alone are going to be helpful when they're learning.
And now that I think about it, I just finished Chris Dixon's book on crypto and the history of the internet, and talking about what I'm saying now, why crypto is the history of the internet. So if I plagiarize any of his ideas, it's because, you know, it's because he's a stud, and, you know, he's a total like world-class thinker on the stuff. So I would just buy his book. It's called Read, Write, Own by Chris Dixon, and read that. And it's written, it's pretty dense.
Read, Write, Own by Chris.
Read, Write, Own. And the premise of the book is that at first the internet was kind of like a Wikipedia, where you could only really read things. Right. And then we have the current internet, which is like social media. You can write, you can post, you can blog, you can create a following. And then the future of the internet is the ownership. That's the digital economy that I've been kind of mentioning. And that's where we're going.
That's where we're headed.
Yeah.
What, different topic for a second. What happened to this whole discussion about the metaverse and NFTs? I mean, I remember watching a Super Bowl ad, I think, one year, where they were talking about the metaverse, and I don't hear anything about it anymore. So what happened?
I mean, it's the classic hype cycle, you know, like people have all these great promises, and then there's the trough of disillusionment, and then the slow climb back up to actually building the technology. This happened with AI. This happened with VR. This happened with every technology we've ever had. So the metaverse it's kind of like the Flintstones for technology, like, or no, not the Flintstones. It's like the Jetsons, where like you think like, oh, we're going to have flying cars in the future, and what, like, the metaverse is the flying cars we're going to have in the future. It requires some major technological breakthroughs. Blockchains need to be super, super scalable. So anyway, let me zoom back out. What is the metaverse even? Because that's like, people will kind of debate like what is this, you know? The most classic conversation about the metaverse or piece of media is the book Ready Player One, which was turned into a movie. And that was kind of a smash hit. It's one of my favorite movies. If you haven't seen it, I recommend watching it. Ready Player One. And in that movie, the metaverse is one giant video game that's controlled by a company. So it's a big video game that everyone in the world hops on. They put on their Apple Vision Pro, they put on a haptic suit, and they get in there, and they're like battling monsters or creating a business, or, you know, making friends. But you basically take the real world and everything interesting about the real world and put it in a digital world, a metaverse. Now, the dystopia in that movie is that one company controls this world. So they can change the monetary policy. They can steal your stuff. They can delete your account. That's terrifying. Because if you build your business, it's the same thing, actually. Chris Dixon talks about this in his book, that you build your business on top of Twitter or Facebook or whatever, and then they're going to shut you down because you're going to compete with them and steal their users. So these companies, they have these moats and they're anti-competitive. Blockchains are fundamentally interoperable and very, very pro-competition, because all your data is owned by you, and then you can just take your data and go, or take your tokens and go move them to another provider if you don't like some service, or if they start to be anti-competitive.
I mean, when you really think about it, I mean, it seems to me, from the way you've described it so beautifully, is that the blockchain is your protection.
It is.
I mean, you don't have that with the dollar. I mean, we've got the Fed printing trillions of dollars. What are these dollars worth, you know?
Right.
I mean, they're just paper, pieces of paper, but they have value because people will accept it as a medium of exchange. But it's losing value by the day.
Yeah.
With inflation. How does inflation affect crypto?
Yeah. So inflation is sort of the silent killer, if you will, of people's portfolios. My goal actually by the end of next year is to be net short US dollars. Yeah. So I don't want to have any exposure positively to US dollars other than cash flow.
So you'll short it by buying more Bitcoin or whatever?
So basically what I would do is I would make sure that 100% of my assets are in assets, not in like treasury bills or bonds or whatever. And then I would probably just take out a mortgage on my apartment and use that money to like fund my lifestyle and like make further investments. But I should keep basically as little cash as possible and a very small manageable amount of leverage to make sure that I'm short the dollar. That's my, because every currency in the history of all currencies has gone to zero.
Every currency ever?
Ever.
Wow.
Like basically, because that's what inflation is. It's that whoever controls the currency is going to keep printing more of it, and then it's going to be less valuable relative to, you know, buying property. For example, you understand this better than anybody. You invest in real things that are going to create value, that have scarcity. You know, this property on the beach or this hotel or this commercial, you know, development. It's one prime of a kind. The location, it's one of a kind. There's a community around it. Yeah. You understand this very well. But when you talk about some funny money that the Fed can just print trillions of, well, why would you want to store your wealth in that? And people don't realize it because historically inflation's been low enough for people to not care. But I think that people are really hurting right now.
They're hurting.
Like, the CPI says inflation is 3.2%. I call bullshit.
That's total bullshit.
I call bullshit. Like,
just go to the grocery store, go to your doctor.
Yeah.
Go buy a car. I mean, inflation's everywhere. It's probably north of 10% is my guess.
I think so. And so when you say, oh, I'm going to like invest in T-bills and that 5% is a great return, first of all, you have to pay taxes on that 5%. Yeah. So your take home is like 2.5. Yeah. So even if the CPI is 3.2, you're still losing money just by holding T-bills.
It's a net loss.
It's actually criminal. And that's why I'm so all in on crypto, because I think that like it's our only way out.
You know, it was really interesting. Ben Bernanke, just to your point, Ben Bernanke, the former Fed chair, once said, if we get into a situation where I have to, I'll get in a helicopter and start throwing dollars out. You know, I mean, if we get into a deflationary cycle, so if we were in a deflationary cycle, he would just start throwing dollars out of helicopters. I mean, that's just scare the shit out of anybody. I mean, that he's willing to say that and probably do it. I mean, it really bodes well for Bitcoin and for Ethereum and blockchain technology and all the things, the protocols you're putting in place. It's really fascinating, really interesting discussion.
Yeah. So, like I said, inflation is sort of the silent killer. And what's really cool about Ethereum specifically is that it has a sort of dynamic monetary policy. Mm-hmm. That's dependent on people using it. So like blockchains need to be secure. Otherwise, like, why would you use them? So what happens is blockchains do have inflation kind of built into them. Or rather, let me kind of put this in another context. The way a blockchain is secured is by having miners or validators. People come in to secure it. It's basically kind of just like the internet. Computers all come in and they hop in and secure the blockchain using special algorithms where they have to put in an investment. It could be an investment of energy, like on Bitcoin, where you're mining, or it could be an investment of assets where you're putting value at risk. On Ethereum, you can do what's called staking, where you can earn interest and secure the Ethereum blockchain.
It's not insignificant interest either.
It's like 3% right now.
Yeah. So, I mean, you've got a stable currency. You've got a protected currency. I'm calling it currency.
Yeah.
Bitcoin. And you can stake it, and Ethereum as an example, and you can make money at it.
Exactly. So what's cool about Ethereum is that staking powers the blockchain. So that's kind of inflation because people are getting paid.
Yeah.
But when you use the blockchain, if I go, like today we were going to talk about taking out leverage, you got to pay a transaction fee. That transaction fee is burned from the supply. So it's deflationary. So you have these counteracting forces. And right now, because Ethereum is we're entering a bull market, things are getting used, the supply is going down by like 0.5% to 1% per year.
Makes it more valuable.
It's the opposite of inflation. If the Fed is printing money, Ethereum is burning money. It's taking it out of supply. It's making it more scarce.
It makes it more valuable.
Yeah. So, and that's the main reason why I think Ethereum is going to be more important than Bitcoin is because the supply is going down. Bitcoin, what happens to the supply is it goes kind of up, but it goes up slower and slower and slower. And eventually it hits 21 million Bitcoins and it'll never go over 21 million. That's a pretty strong guarantee. There's ways to change that, but I don't think that the Bitcoin community would ever change that. I think Bitcoin is going to be 21 million Bitcoins forever. Ethereum, the supplies, sometimes it goes up, sometimes it goes down, but if a lot of people start using Ethereum, the supply is going to go down and it might even start going down pretty fast. That is what we call ultrasound money. It's money that's not just hard. It's like so hard that it's disappearing and you got to get as much as you can or it's going to be all gone. You won't be able to get any.
So that's crazy. One of the things I wanted to ask you about was we talked about inflation and deflation. We've talked about the instability of the dollar and global markets and how people can make money. You following what we're talking about here. But we never really got back to finishing the discussion on what happened to NFTs and the metaverse.
Yeah.
So are they alive and they're coming back and are they in that cycle?
100%. And there's probably going to be the same way there's multiple blockchains, there's going to be multiple metaverses. Like the closest analog to the metaverse that we have today are what are called MMORPGs. These are video games that are online that are massively multiplayer. So like, for example, like Fortnite or, World of Warcraft or EVE Online. These are games where a bunch of people go in and there's millions of players all playing together. And each little part of the world is its own little economy. People are fighting and trading and building together. I think video games are awesome. And it kind of is like an extension of human creativity and spirit. And like, I think I learned a lot of I learned a lot of different tools and skill sets and mental models through playing a ton of video games as a kid. And you hear this story like Fred Ersham, who's one of the greatest thinkers in crypto. He founded Coinbase and Paradigm. And he used to play a ton of video games. He was like competitive at, I think, Dota or something else. And so video games are great, but again, they're controlled by these companies that manage your accounts and users and the economies. But what if we put the economy of the video game on a blockchain? That's essentially one promise of the metaverse. There's sort of two technology trends that are going to intersect at some point, or three. Video games, massively multiplayer online video games, right. Blockchains, and virtual reality. Those are the three pieces. So when you combine all those things, you get something like a better version of Ready Player One, where you can go build your whole business in the metaverse. It's not just on Instagram. Now it's like in this giant shared community video game where, everything is kind of heightened to another level. There's going to be millions and millions of dollars to be made by getting in there and being like a metaverse influencer and buying digital real estate in the metaverse in a cool location. I know it sounds funny, but it's going to happen. It is. It's totally going to happen.
Well, that's why I touched on it. I mean, we don't need to spend a lot of time on it, but I just wanted to give the viewers an understanding that the metaverse is still alive. NFTs are still functional.
Yeah.
But you explained it very well where you said there's a cycle that every technology goes through.
Yeah.
And so we're probably down at the low of the valley part of the cycle right now, starting to come out, right?
Right. And something really interesting is happening right now. So crypto is nearing its all-time highs. Bitcoin actually passed its all-time high. The stock market is passing all-time highs. So everyone's saying, okay, we're back in a bull market. And I think that's great. But in crypto specifically right now, it doesn't feel like everyone's kind of always asking the question, when is the mass adoption coming? When is my grandmother going to be using crypto?
Well, that was my next question.
Yeah. So, and it's weird because it doesn't feel like the mass adoption for these technologies is close. That's why I'm saying 5-10 years down the line. But access to the monetary properties of cryptocurrency, so like DeFi, for example, I think is close. So I think the metaverse is super far away. I think that things like, basically a lot of this digital economy stuff where we're gonna sell our house on a blockchain. I wish we could do that today, but I don't think we're close to that because we need some major regulatory overhauls to get there.
So, question for you: what is the reason that we're not using Bitcoin and other tokens for regular daily medium of exchange?
So like, why wouldn't you use gold or your gold ETFs when you go to Walmart?
I wouldn't use gold because they couldn't pay. They don't store gold. They wouldn't be able to pay me back.
Yeah. So, but why wouldn't you use a gold ETF? It has a market value. It's backed by gold.
Right. Are you asking me why I wouldn't?
Yeah, I'm asking you. Or why wouldn't the store accept it?
The store wouldn't accept it because it's not in regular circulation, right?
It's not that it's not in circulation. It's that the store is doing their business in dollars. They're doing their accounting in dollars. Right. And the dollar is like all the infrastructure that we have in America is built around the dollar. If you go to Europe, you'll use euros. And if you go to China, you use renminbi, you know? So why aren't we using crypto yet? Because crypto, in my opinion, is primarily, at least Bitcoin, is primarily a store of value, not a medium of exchange.
Okay.
And so it's really something that people are going to put their wealth in, but they're not going to actually go spend it because, again, I'm trying to be short dollars. So I'd rather spend my dollars than spend my Bitcoin.
Right.
Because Bitcoin is scarce, but dollars are cheap. Right. And so I'm going to go spend my dollars at the supermarket and I'm going to use my dollars to buy more Bitcoin, not like spend my Bitcoin.
It's really interesting.
A lot of people think like, oh, if I'm never going to buy a car or a house or groceries with Bitcoin, then what's the point of holding it? Well, the point is that you're being stolen from by holding dollars. That's the point. It's like it doesn't, you don't need more of a point than that.
No, that is the main point.
Yeah.
And that's really good for our listeners to understand is that the dollar, every currency has eventually disappeared.
Yep.
And
or became irrelevant. Like it might as well have disappeared.
Yeah. Well, I mean, it became irrelevant, right?
Yeah.
What else would you tell our viewers that they should be thinking about in terms of the crypto world?
Yeah, so maybe I'll go back to the playbook.
Okay.
So my theory of investing is try to keep it simple. You know, don't try to do a bunch of crazy stuff. Like if you go out there and try to buy meme coins or buy the next up and coming crypto, you can do that, but I don't do that, and I consider myself basically an expert, even though I think I'm an idiot. Like compared to how much I could know, but you get what I'm saying, like the Dunning-Kruger effect or whatever. Like don't go speculate. Don't go think that you know something. Invest simple strategy in quality. If it's not in the top 10 cryptocurrencies by market cap, don't even touch it. And I would say stick to Bitcoin and Ethereum, and maybe like touch the next 2 or 3 down the list if you want. Solana, for example, I thought about buying some actually when it was back at 30, and I didn't because I think Solana is great. Like I said, I have a bunch of builder friends over there. Now I'm like, oh, it went up 6x. Maybe I missed the boat. I'm probably gonna buy some Solana at some point. Now? 180.
Wow. Yeah, I had it in the 30s and I sold it.
Yeah, exactly. So anyway, keep your strategy simple. So pick a percentage of your net worth that you want to have in crypto, call it 3% or 5%, and then make a plan. So either put it all in today and then never sell it, or dollar cost average over a year and make it automatic. And then only invest if you're like ready to ride it to zero. Because I do believe crypto can go to zero. I'm making a big bet on it with my personal portfolio. I don't recommend making that big of a bet. But if you're going to make a bet, have a plan. And the plan is like, I'm not selling it until I'm retiring, for example. That's my plan. So keep it simple. Bitcoin, Ether, maybe 1 or 2 more.
Let me ask you just ironic. There's some irony here. So you said you wouldn't sell it until you retire, right?
Yeah.
What medium of exchange would you sell it for?
Well, probably dollars. I think America's still going to be around when I'm 80.
That's the great irony in this thing. I tell this to people all the time. I go, so you're selling your Bitcoin for what? Dollars.
Yeah. I mean, and so what I might do. So when I say sell it, what I really mean is use it to fund my lifestyle. So if in 100 years we transition over to using Bitcoin for some reason, I'll just start spending it. It's kind of like now I'm done investing, now I'm spending. Right. If that makes sense.
That's where I'm at.
So it doesn't mean I'm literally going to sell it for dollars. It just means I'm not going to hoard it like a dragon anymore. I'm going to use it.
So it's a lot like what you're talking about as a store of value is what I'm doing. I'm doing it maybe a little differently, but I'm doing it through real estate where I'm buying 20 to 30 projects a year
Yeah.
and storing value in those assets. And you were talking about, get assets.
Right.
You don't want dollars. I don't want dollars.
Yeah, me either.
I mean, I get paid in dollars because that's the medium of exchange that's widely accepted today. But all my real estate is to hold wealth.
Yep.
And so I think that's what you're alluding to, is that's the value of Bitcoin right now, currently. It's not really used as a dollar medium of exchange per se, although it can be. It's really used as a medium of holding value.
Yeah, and I would actually argue that it's irresponsible. It's financially irresponsible not to have crypto. That's a big statement. But what I mean is that cryptocurrency at this point, it's a $1 trillion asset class. It's not going anywhere anytime soon, in my opinion. And so, if anything, not having not being a part of this technology movement is kind of like saying you're going to go back to the 90s and not buy any tech stocks. You're not going to touch Microsoft. You're not going to touch Google. You're not going to touch Amazon. You're really missing out on some potentially incredible life-changing returns. That's not to say that you got to have a plan. You got to be ready to lose 90% of your paper wealth and hang on, not sell it.
It takes a strong stomach.
It does. It really does. And that's why, it's not even so much about being smart. It's about being a motherfucker, you can't sell anything. You gotta I've watched my net worth go. I've made and lost more money than people would in their lifetimes, in days. And that's just because that's the nature of the game. You have to hang on, and you're going to get bucked like a bull, and everyone's going to want you to sell. Wall Street wants you to sell, or or when it goes up, they're going to want you to buy the top, right? Because they're looking for exit liquidity. So you just have to have a really long-term view. You're a part of a technology movement. You're trying to make money, but more than that, you want to be a part of something, and you want to believe in cryptocurrency, and that's the reason to buy it and hold it and not sell when things get crazy.
Do you know factually what percentage of the population actually holds crypto?
I know it's more popular in younger demographics. Yeah. So a lot of Gen Z, millennials, or Gen Zennials or whatever.
Gen Zennials.
Brittany was saying.
Yeah. The Gen Zennials.
A lot of Gen Zennials will have crypto,
yeah.
And then less so among more boomer types. Although what I found actually is that a lot of kind of the sort of upper middle class, my dad's a doctor, a lot of his friends, they all are yeah, I got a couple Bitcoins, because they understand, even though they don't understand the technology, they've invested enough and they've been around the block enough to know, right. You want to be a part of a movement. Yeah. And you don't want to be left behind. So there's this FOMO.
That's what
yeah.
It's a FOMO fact.
There's this FOMO, but it's deeper than that. It's it's just a smart bet, and you got to believe I'm making a bet. It could go to zero, but it also could make me a ton of money, and it's something I want to be a part of. And if it doesn't work, then at least we tried. We had a vision for the future, and
it reminds me of the GameStop thing, where there was a FOMO thing. If you've ever seen one, right?
Okay, so this is actually a great segue.
Go ahead.
So, I want to hear what you were going to say about GameStop, but it's very similar to what's happening in cryptocurrency.
Oh, go ahead. Just finish your thought.
Okay, so Chris Dixon in his book Read, Write, Own talks about there's sort of two sides to crypto. There's the computer, the ownership economy that I was kind of talking about, the app store, if you will, that I built my company on that you could, go use today. And then there's the casino. Right? The casino where it's crypto is the perfect speculation medium because anyone can make a token about anything. You know what one of the top 10 cryptocurrencies is? Dogecoin. It's a joke. It's a meme coin. It's a cryptocurrency that is identical in every way to Bitcoin, but its brand is it's a dog.
Was that made by Elon Musk?
So Elon Musk didn't make it, but he was the biggest promoter of it. So he bought a bunch of Dogecoin, and in a lot of ways, Dogecoin is actually kind of better than Bitcoin. I don't have any, but what's cool about Dogecoin is that it's not a bunch of Wall Street guys or the Winklevoss twins or whatever. It's real people in around the world who are just think that this dog coin is funny, and that's kind of beautiful, And so crypto allows for sort of speculation of the highest degree, similar to what happened in the GameStop saga. And I mean, we could talk about GameStop. Like, that was just an incredible moment in human history where people saw that Wall Street kind of got out of bounds. They were over short a stock and then just squeezed the shit out of them. And like, I thought it was like one of the coolest examples of the collective power of the market and human coordination. And that's what's so beautiful about crypto is crypto just unlocks these kinds of things. But that's not to say that it's good, you know, like this casino culture is I've seen a lot of people get ruined, you know, where they take on too much leverage, they bet the house and they get wiped out. And that's also kind of tragic. So it's kind of a double-edged sword, and that's the name of the game. Like we're in the real world, it's the jungle out there, and you got to like make better decisions than the next guy to get ahead.
You know, that's really interesting because that same tragedy happens in real estate.
Yep.
And it's very cyclical. It's very predictable.
Exactly.
We're in it right now. I mean, you know, for all intents and purposes, real estate is overvalued. I mean, it's very hard to make a deal pencil today. You know, interest rates have doubled, 3 to 6 or more. Inflation costs for construction are way up. Materials prices are way up.
Yep.
I mean, this whole notion that we're in a 2 to 3% inflation economy is such bullshit.
Yeah.
I mean, you got the Fed just directly lying to the American people.
It's sick.
It's really tragic. People are really struggling, and you know, they're looking for a place to put their money that's safe. And they said having crypto is it's criminal not to have some.
Yeah, I mean, it's not criminal not to have it,
right.
But it's a mistake.
It's a mistake.
Yeah.
But I really believe in it. I mean, I've seen the effects of what it's doing to the markets and how people are really starting to, I think people are starting to understand it better. As we do more podcasts and people like you go out and talk more about it and give education to the people, it's going to make it more and more usable, more investable, and people are going to trust it more. And I think that we need that. Yeah.
So for the investability piece, actually, major news is happening right now. We talk about the Bitcoin ETF.
Yeah.
So like for those of you who
did that, right?
Yeah. So for those who haven't heard, I mean, it wasn't just BlackRock; it was everybody on Wall Street. So there's this kind of constant tension between what I would call like traditional finance and crypto finance or decentralized finance, where the end goal is the same. We want to unlock markets, unlock financial opportunity for people. The problem with traditional finance is that all of your money is held in these silos where you got to be at one bank or one brokerage or one, you know, and then you don't have access to opportunities. Like Robinhood has done so much good for people. Again, Robinhood is kind of a microcosm of crypto or vice versa. It's all the same. Because Robinhood unlocked a ton of speculation. So is that good or bad? I don't know. But it also gave people access to options. So now, like, let's say I used to work at Okta. It's an incredible software company in San Francisco. And I had, at that point, like well over half of my net worth was in unvested or vested Okta stock. And so what I could have done if I wanted to hedge is I could have gone on Robinhood and just bought puts and hedged my exposure to the market. That requires financial understanding and planning for people, which is, you know, it's hard to educate. But at the same time, I think people are really smart. Like, I think people are really fucking smart. And like, they just don't believe that they can like learn these things. But you can go out and learn, and you can make a plan that like all the information is available online. And so the only thing that the real crime here is that regulators and the government are going to lie to you and put up these walls and give Wall Street all of your money and not let you go make the bets that you want to make. And so, yes, you can go like lose all your money on out of the money call options or like, you know, but you can also go make a bunch of money on those things or hedge your assets but it's up to you to go out there and like make mistakes and learn and get better. And often I actually think that it's great for these like, you know, Zoomers to get out there and just like lose their, you know, $1,000 net worth on crazy call options, because when they become $10,000, $100,000, $1 million, they're going to be smarter. Yeah. And they're not going to make those mistakes with bigger amounts of money, and they're going to be able to provide for their families. And it's the same like with poker, you know, I'm a big poker player and I've gotten the shit kicked out of me so many times. And then every time I think I'm smart, I take extra risk and then I get humbled again. And so like, you know, it's the same in the markets. And like, this is kind of the journey of the human. Like you just need to like get out in the world and learn and grow and then make mistakes and then have more power, more assets and make bigger bets and bigger mistakes and just keep kind of going from there.
That's 100% right. I mean, that's 100% right. I mean, I started, like I told my listeners, I started with no real estate, no money. I started with nothing and built a $2.5 billion empire.
Yeah.
And, you know, today you sit here and you go, how did that happen? I'm looking backwards, but how did we do that? And it was in a time when, you know, the economy was at a low point. We were in recession. It started when the real estate prices were depressed. Nobody was buying, because I fundamentally believe 90% of the people are wrong 90% of the time.
Yep.
I believe, so I'm a total contrarian. When other people are selling real estate, I'm buying. When they're selling stocks, I'm buying. Yeah, assuming the fundamentals are all good.
Sure.
But I just believe that they've been misinformed, either through their formal education. I mean, my daughter has a degree in finance, so she'll tell you she didn't learn anything about really how to operate in markets and cryptocurrencies and real estate transact. They didn't learn anything. I mean, the educational system is not doing itself a service, and it's not doing the kids who are going to school a service in the particular field of finance and learning how to build great generational wealth. And so literally, I'm having to teach my kids all of that they should have learned in the finance sector. What do you think about the formal education system, and how does it tie into crypto and definance? Are they teaching that?
Oh, wow. Okay. So one, I mean, your kids are so lucky to have you as a resource, right? Like not everyone does. And it's a lot easier when it's, you know, your dad than like some guy on YouTube. It's hard to know who to trust when you're online, or in school, right? Like, do you think these teachers, are they part of the 90% or part of the 10%?
Right.
And, my feeling is that 90% of the people are wrong 90% of the time, but 90% of those people can go enter the 10% with the right knowledge and skills 100%. And effort. So
that's right.
Not everyone can, and that's just a reality, but I think almost everyone really can improve their life, like through knowledge, through, going out and finding the right resources. And it just requires a little bit of luck and a lot of hard work. That's really what it takes.
It really does. And timing.
Yeah.
Yeah. So when we started our business, we were buying plots of land that nobody wanted.
Right.
But I knew the fundamentals were good.
Right.
It was a good hard corner at Main and Main in any city.
Yep.
And I knew I could do a Walgreens there. I could do a CVS. I could do, somebody wants that piece of real estate, but just hasn't been exposed to it.
Yeah.
And so we did like 40 shopping centers and 10,000 apartments, and we did so much stuff. I'm more now really just buying assets to hedge against the dollar. Exactly. And so I think that's what you're advocating.
It's not even a hedge. It's just a smart bet. Like when you say hedging, it's like you're protecting against something, but it's inevitable that the dollar is going to go to zero. It's not even a hedge. It's just like you need to buy assets. You need to. It's the only way to get ahead financially, in my opinion. So it's increase your earning power, decrease your spending, and buy as many assets as you can. That's
great advice. It's great advice.
Yeah.
So what anything you got to talk to me about? Anything on your mind?
I mean, dude, we could talk forever. You talked about the education system. I think that traditional schooling is way too focused on conformity, and it's not keeping up with technology. I have this personal philosophy that I've kind of cultivated throughout my life of being a technology optimist. So I'm actually very pro crypto. I'm pro AI. I'm pro virtual reality, and I could talk about like why for all of those things. And I think that schools. The best thing about school is that all these kids are going there and they're like, oh, I got the Apple Vision Pro and check out this new video game and look at like Robinhood, and like kids are learning online. And yes, there's a lot of traps there where parents need to be really on guard. They need to make sure their kids are consuming the right content and not going down paths that are not going to serve them. And that's a tough problem to solve. I think that the core of this idea is that everyone should take on the maximum amount of personal responsibility for their situation and be as pro-social as possible. Right. So like you take care of yourself and your own as the highest priority. And once you have yourself and your own taken care of, then you go out and do what you do with your philanthropy and like, you know, because you've taken care of the basics and you've built that, that knowledge, that experience, that wealth that you can then go and share. But like, you know, I think that, young people should not be thinking like, how can I like go be super generous with my wealth today? They should be thinking, how can I become the most effective individual today? And then with the goal of eventually going out. And once they've kind of made it, then they go and they change the world, or they like give back to the community in a bigger way. And I think that's just the natural order of things. In the school system, it still exists because that core of like putting kids together, like that, like melting pot of ideas and, you know, that is still really great. But the actual education is just like almost non-existent or even counterproductive. But you know, what do I know? Like, I like, you know, if you put me in charge, I'm sure a bunch of shit would get messed up, but like, I would make some changes. That's for sure.
Well, let me ask you a different question. AI in particular, how is AI going to factor into the crypto world, the metaverse? How's AI going to fit into all this?
Yeah. So if we talk about what's the core driving factor behind crypto, that's the ownership economy. It's putting ownership on chain, online. We talk about AI. AI is democratizing intelligence. So if the internet is about data, crypto is about ownership. AI is about intelligence. It's about knowledge, essentially. It's an artificial intelligence that takes the sum total of all of our human collective knowledge on the internet and then condenses it into a model that you can use to ask specific questions or gain some creativity. I found that like I use ChatGPT pretty much every day at this point, and it's certainly like better than Google because there's no ads, and I can just be like, hey, what's the answer to this? And it will tie together all the resources and do the research for me. But even more than that, for creative endeavors, ChatGPT just like blows out of the water because not everyone is creative. You know, like I think I'm reasonably creative, but I'm like pretty linear in my thinking. So when I go to ChatGPT, which has read the sum total of all human knowledge, and I say, I want to write a poem or make a tweet with like this funny characteristic, but I'm not smart enough to come up with that thing, but I know the question. Chat will come up with like 10 good ideas, and I'll use my human knowledge to find the best one of those 10. And for writing code, I mean, it's kind of scary. Like I've had, you know, I'm a software engineer by training. I write code to like, I use data and technology to make my life better. Like I manage my finances on my own using technology. I keep my to-do list myself and whatever. And I had to like do some data movement between different apps because one technology company was anti-competitive and locked in all my data, and I had to find a way to get it out before they like shut me down completely. And I was like, hey chat, how do I do this? And it said, oh, you can use this API and here's some code. And like, it was nuts. And I wrote the code and I debugged it because it wasn't perfect, but me and chat together, 1 + 1 is 3. It's way more than just like, you know, me on my own. And you can really leverage AI to do a lot of things. And I think people tend to take in general, people tend to take a static view of technology. Like, oh, you know, crypto is super risky right now, so I shouldn't touch it because I might lose all my money. Or AI is like too weird and inhuman, I don't want to use it. But I think that that's a static view, but the technology is growing exponentially. So AI is going to be more human and more intelligent and more creative every year. It's going to get 10 times better or whatever so you might as well start using it today because tomorrow it's going to be so alien that you you might be already behind.
So let me push forward a little bit. As it relates to investing in, crypto or deep finance, what level is it going to come in at, and what are going to be the net effects of AI? Just more efficient transactions?
I think that AI, like I said, AI is about intelligence. So if you think like, what can intelligence get you? It can help you make smarter financial decisions. It can help you like spot the new cryptocurrency. But like realistically, I just think that there's no free lunch. So if we talk about the structure of a market, no one AI is ever going to permanently beat the market, because that's just not how multiplayer games work. Like in poker, for example, at one point in time, like Doyle Brunson was the best poker player in the world because he just like waited until he got pocket kings and then smashed everybody. But eventually other people started to realize I can bluff him and I can slowly leak money from him because he's not aggressive enough. So then Daniel Negreanu and Phil Ivey became the best. And now like I don't know who's the best because I haven't followed as closely, but the game changes over time. So what's going to happen is these AIs are going to come in and there's going to be all these hedge funds that say we beat the market, and then they're going to make 40% returns every year for 3 years, and then they're going to get over leveraged and lose their shirt. And then a new AI is going to come in and that's going to be better than that one. But no one AI is going to be like, you know, because the AIs are going to start competing with each other in the same way that like in chess, for example. So AI actually, when AI beat the world chess champion, that was one of the coolest moments, I think, in technology for me that I've ever seen. Because I'm also like a chess player. I love chess. I play pretty much every morning. And the level of skill gap between me and someone who doesn't know how to play chess is hilarious. Like you'll never win a game. And the level of skill gap between me and the best chess player in the world is hilarious. I'll never win a game. And the level of skill gap between the best chess player in the world and the best chess AI is hilarious. He will never win a game against the best AI.
That's
never.
So insane.
And so
that is so insane.
He might draw every once in a while, but they'll never win.
Wow.
And so when you talk about like, that's just craziness. And so when we talk about investing, I think it's like, this is a really strong take, but I think it's pretty much irresponsible to invest unless you're investing full time, to actively invest. Like I think if you're stock picking, like you're brilliant and you built a system and you did it, and I think you're an outlier. But I think for most people, when you talk about competitive games, unless you have reason to believe that you have a true edge in a hyper competitive market, you just buy the index. So for me, I never stock pick unless I really know something. Like I bought Coinbase stock. It's the only individual stock that I own and now I'm up like 5x on that. But that maybe I'm lucky, but I know crypto. I know Coinbase as a business. So I bought that and I made money on that. But other than that, Vanguard S&P 500.
Yeah,
that's it.
That was one of the topics of discussion we had, where I was actually encouraging people to stay away from just the indexes, just as their sole investment, because the index you'll always just be the market. You're going to run with the market. But if you learn enough about how to value companies, it takes time, and it takes modeling, and it takes intellect, and it takes training to really understand what is the intrinsic value of that stock worth. I'm very good at that.
Right.
So I spend my time evaluating companies and make 6-10x on my money, where most people couldn't do that. So I think to what you're saying is the same thing. This AI component is a learning process. It just keeps learning and learning. And it's infinite, basically, right?
Yeah.
I mean, it's the learning on the AI is going to be infinite, and its effects we won't know for years.
Yeah.
It's really incredible.
So maybe to touch on that, I truly believe that most people should not be doing that process that you described, because the amount of time, like the game is harder now. Yeah. And so the amount of time that you have to invest to become a good investor, and the access to knowledge and the competitiveness, when now you're competing against the AIs. Yeah. Today, AIs are probably up in the markets on these hedge funds, and they're trying to eat your lunch. So I don't think the game is the same anymore. And I would actually pretty strongly recommend you to take the market returns. Because if you try to deviate, you're probably just going to lose.
So you believe it's truly an efficient market?
I believe that it's efficient relative to you.
Right.
So yes, there are inefficiencies, but the only people who are going to find those are the best traders on Wall Street and AIs. And so for you, the best thing that you can do is become expert at something.
Right.
But something specific. Don't just be like, oh, I'm an investor. I'm going to go learn about oil, and I'm going to learn about biotech, and I'm going to learn about cloud computing. Like you're not going to become an expert on any of those things if you try to learn all of them.
Right.
So I became an expert on cryptocurrency. That's the only thing that I actively invest in because I know it better than,
And that's one thing we talk about.
Exactly.
Sticking to your wheelhouse.
Exactly.
Don't, Warren Buffett's famous for saying that.
Yeah.
Don't invest in something you don't understand, which is why we had this whole segment on crypto, because I want my listeners to understand crypto, and you're an expert at it. So we're going to have these conversations ongoing about bringing experts in their functional discipline,
right?
So that these people can learn from it, maybe just enough knowledge and pique their interest, just enough they'll go learn.
Yeah,
and have that as part of their repertoire.
Right. And I would say that when I started to get into the weeds about decentralized finance, your eyes started to glaze over, don't go any further than Bitcoin and Ethereum. Right. Like learn what you can, buy them on Coinbase, and then move on with your life. Now you're invested in the movement. Yeah. It's the same as like buying the S&P 500. If you believe in technology in America, just buy the S&P 500 and then go on with your life and do what you love to do or what you're good at. It's the same with crypto. Like you do not need to become an expert on crypto. I'm just a nerd like that. And it's what works for me. So for you, very easy. Buy Bitcoin, buy Ethereum, and then just like move on with your life. Don't kick back, but continue to grow in the ways that, are for you. Right?
Yeah. You know what? I mean, because I'm an expert in real estate and finance, I love valuing real estate. I love valuing companies. I love that. I just thrive on that.
Yep.
And not everybody shares that passion.
Exactly.
For most people, they're making a living. They're trying to sock away some savings. They're trying to have something for retirement. And with inflation, it's a dream killer.
Yeah, it really is.
And so
the 401k is not enough. The Roth is not enough. It really isn't.
No.
Especially if you're picking the wrong investments inside of those vehicles. A lot of people think, I have my 401k, I'm good. There's so many traps. Like I was talking to my girlfriend, and her 401k was like half in cash. She didn't know. So it's not invested in anything, And she was doing a bunch of financial research on her own, and she actually found some people who helped her to actually go and look, and she saw what it was. And so we got her in the index funds, and that's what you have to do. You have to, go and invest and, just make sure that you're really trying to increase your earning potential, decrease your spending, and buy as many assets as you can. That's the game.
The only name of the game is accumulation, right?
Yep.
It's accumulation of productive assets. I just see people. Let me ask you something. What's one of the biggest mistakes people make when they invest in crypto?
Like I said, it's like trying to pick the next big thing. Like everyone always asks me this question, and I'm like, I could tell you what I think is cool, but I'm not going to invest in it because all I know is that Bitcoin and Ether are going to be the best performing assets of all time. And like, maybe, I missed the 6X on Solana and like, okay, but I believe in my strategy. And so I'm just going to stick to it. And I'm not going to get swayed by the mood of the day, even if Solana does become like I said, Solana is really kind of getting there. And so I'm considering investing in it, but it's taken a long time. Like Solana's been around for years when I could have bought it at $7. Now it's at 180, it's taken a long time for me to build the comfort that it's going to be there in 10 years. So that's the kind of attitude that you need to have.
The biggest mistake is chasing the newest, greatest, coin.
Yeah, exactly.
It's the new one's out. I got to get it. I got to be a part of it.
Yeah.
You don't know anything about it. It's like anything. If you don't know anything about it, don't touch it.
Right. Exactly. And so now that you've listened to this podcast, my hope is that you believe, like I do, that crypto is a movement that you want to be a part of. And so you dip your toes in the water and you buy the index or like the most popular cryptocurrencies. And then you don't need to go any deeper than that.
I think that's great advice.
Yeah.
I think we've given our listeners a lot of value. Thank you so much, because you really edified me. I'm sure you've edified thousands of people who are going to watch this and go, it's not that complicated. He gave me the secrets.
Right.
You give them information that they can use today to make money in crypto tomorrow.
Yeah.
And I'm sure that's really appreciated. And it's great to see you, my friend. You look fucking awesome.
Thank you, man. It's been so awesome. I am, yeah.
Okay, so I've got 2 questions I ask everybody at the end of the podcast.
All right.
First, tell us a lot about a person. What's your favorite beer?
Okay. So I pretty much stopped drinking as of like August last year. I got pretty drunk on New Year's, but other than that, I haven't really had any alcohol at all since August.
Congratulations.
So my theory for that is like, it was a lot easier for me to make the lifestyle change if it was kind of cold turkey in my head. But
So you just cut it off.
I did. And then now I'm like reevaluating the role of alcohol in my life, because obviously it brings people together.
Yeah,
and I think
it's
that
a social thing.
it's a social thing. It's really beautiful. But I don't really drink beer. So I think if I was going to do alcohol, it would be wine and like hard alcohol. Okay. I don't know why I never really like was into beer. So I guess that tells something about me.
Yeah. Because you're not a beer drinker.
Yeah. If I had to pick though, I would pick Corona, because their branding just gets me. Like I always feel like I'm on the beach in Mexico if I'm drinking a Corona. Okay. So that would be my answer.
And the second question is, so this is the Make More podcast. It's not just about making more money. It's about making more of your life, making more of your health, making more of friends, whatever. Tell me the one thing that you'd like to make more of.
Make more love.
Make more love.
Yeah.
Yeah.
Like I've been thinking a lot about what matters. You know, I've like I said, I feel like I've kind of achieved a lot at a young age, and I hit the wall a little bit last year where I was like, okay, what's next? And then I realized that the true thing that matters the most is that your relationships. And so yeah, and like growing, you know, life is a constant growth. If I stagnate, then I'm dying. If you're not growing, you're dying. So I want to grow my heart, love more, but also like grow in the gym, grow financially, grow intellectually. So as long as I'm pursuing growth, I feel like I'm making more. And that's kind of the attitude that I like to apply to life.
Really awesome.
Yeah.
Yeah, I share your view. I mean, the world needs a lot more love. And, you know, love is the greatest asset.
Yeah.
You know, it changes lives.
That's why we want money. We want more money so we can have more love and do more of what we love to do.
Exactly.
Yeah.
Well, thanks for coming on, Joey.
Thanks for having me.
I love having you. You're a good man.
You too. I mean, I learned a lot from you, and I'm grateful to you for everything you've taught me.
For your success.
Thank you.